Moe has lived in Ottawa for 30 years and used to be scared of taxes and accounting, but not numbers. He chose accounting as a career out of ignorance. He thought it would be really easy, just income and expenses and no big deal. After getting his butt kicked in university, he realized it was way more than that. Nevertheless, he fell in love with taxes in 1996 when his professor showed him how to crunch the numbers. He says it's been an amazing journey. He's worked at 7 different CA firms, 3 years at the CRA, 14 years in internal controls, and has worked for and with many masters. He has now been the chief number cruncher at Numetrica City for over 3 years. Having worked on both sides of the fence, he considers himself blessed for his initial ignorance. Please join me in welcoming Moe Tabesh from Numetrica City.
Thanks, Kaitlin.
Thank you for being here.
It still hurts. Thank you. Thank you. Yes, I can't believe it. Revenue expense. What else? What could it be? It was.
This accounting stuff
lots.
is not that hard.
Exactly.
Yeah.
I mean, just no. Yeah.
Yeah. So we are here to just chat about, taxes and how to make it easier, tax season in general. So I want to start with the question that I get most often. How do I know what documents I need to collect?
All right. Well, actually, I guess the best would be create a folder just for your taxes and just drop it in. It could be a physical folder or it could be a Dropbox folder. I like Dropbox because then I know where to go and get the numbers or get the document. So for example, let's say you get a donation documents that you pay donations, you can put it in there. I think that's like one of the most missed items because you pay but you forget. And that's what it is. There are a lot of documents that will come to you, and then you forget that you had them. So when I talk to a client, I say, oh, what did you do? Do you have any medical? Oh yeah, I paid for dental. Or did you have, again, donations? Oh yeah, we paid, to blah blah charity.
Yeah.
Especially these times, COVID times, some people I guess have contributed. So if you have a specific place for it, you can put it. It's fine if you over collect because, so if it doesn't apply, you can put it away.
Yeah.
But if you under collect, then this is money that, you left out. Could be, hundreds, could be thousands that you missed, and it's unfortunate.
Yeah.
Yeah.
I like that idea of collecting throughout the year.
Yeah.
And you could start like right after tax season, just say, okay, what did I need this year? I'm gonna make a little list based on what I needed, and I'm just gonna put it into my.
One of my clients actually, he did this, and I was like, wow, that's a good idea. We set him on Dropbox for his taxes, and I noticed, during the year, it says, Michael added, blah blah document, or Michael added this. Rsps, donations, medical expense. The other benefit of Dropbox is that the PDF doesn't, you cannot stain it with coffee. I have T4 that, I guess somebody, before bringing it to me had some shopping and there was all kinds of, stuff on it. So you had to like wipe it and see what the numbers are. But Dropbox is the best.
Yeah, okay. And so when we talked about collecting documents and stuff like that, but what are the most common mistakes that you see being made or issues that come up?
To be honest with you, something that I'm actually a little upset is a lot of people, I get it if it's simple tax return, you can do it yourself.
Yeah.
But even at that, you shouldn't, just like we mentioned, I had my ass kicked because, I thought it's just revenues and expenses.
Yeah.
Some people would prepare their taxes because it's U-file. I actually wrote an article recently. I said root canal. I mean, root canal $20. Would you do it? But a lot of people do the U-file for $20.
Yeah.
So that's where they miss a lot of data. I've seen, people have done their taxes and then they came to me and said, I'm not comfortable. Can you look at it? So when they did it, they owed $500. I did it, they got $3,500 back.
Wow.
Yeah, and it was what was missed. He was working at home, and he missed all of that. Even though he had the form T2200, which the boss signed and said, yes, you're allowed to work at home. So, working at home, a lot of people miss it, even if you just have a T4 and you work at home, especially last year.
Yeah, especially last
Tons
year.
of people worked at home. It's actually a new schedule in the tax form. It's the T777WS that you can fill out. For every day you worked at home, you get $2, I guess, credit or whatnot. So a lot of people would miss that one, which would be, so a lot of self-employed people, again, also miss working at home piece. So that would be the number one. And that adds up.
Absolutely.
A few $100, which again, money out of your pocket.
Yeah, or kilometer log is a big one that I see too.
Yeah.
Where I'll ask for, what are the kilometers that you drove during the year for business versus for like total, and they're like, oh, I actually don't know that.
Exactly.
Yeah, that is a big one. I think generally, if you're not comfortable with like doing your taxes, that's a really big red flag. You should probably talk to somebody.
Exactly.
Yeah.
Exactly.
If you receive your slips and you have a look at them and you're like, this doesn't seem right to me. Like, I feel like there's something wrong.
Yeah.
What can you do about that?
Well, you can compare it against your last pay stub. Because on the last pay stub, it would say year to date.
Okay.
So year to date is what you've received up to that, up to December 31. So let's say on year to date, it says you've made, $96,000, but then your T4 says 140 or it says 80. There's a difference. So then you can at least say, hey, listen, this is wrong, and you can, just give it to the boss or HR, say compare this. If you don't see a resolution that way, what you could do, fill out your taxes based on that last pay stub. You can even attach the T4, maybe write a little note on top and saying, I think there's a mistake on my T4. This is the last pay stub, so my numbers should be, as I've reflected in my tax return, please adjust. CRA will do that. Actually, if you go one step further, let's say you worked at a place and the boss never gave you a T4 and you're stuck, it's April, you want to do taxes, let's say you owe money. Again, what you can do is grab that pay stub, take the last numbers, the year to date, it has your earnings, it has the EI, it has the CPP, it has income tax deducted. These are the main items that you need. At least send it that way. CRA will actually accept it, prepare the return, and they can access the T4. They can access to see if your T4s were actually prepared by the company. The company may have been bankrupted and they never filed the T4, but CRA would honor that last pay stub, even though the company did not make any source deductions to the government. So on that sense, CRA is on your side.
That's a good point, actually, that if you have paid your source deductions off your check, you are not on the hook for it if the company doesn't pay it to the CRA.
Yeah.
I've had questions about that for sure.
Yeah.
I actually saw that this year where a company went bankrupt in April or so, and then the client was like, I'm supposed to have a T4, but they went bankrupt and I didn't even get my last check, and so I really don't think I'm going to see a T4. What can we do? And then exactly that,
Actually, on that sense, to add to that, so not only you can use your last pay stub to file your tax return, you could actually go to Service Canada, say this company went bankrupt. I think you're insured about maybe 1 or 2 paychecks by the government.
Oh.
So this is one of the programs that Service Canada runs. I forgot what it's called, but basically it's like a workers' insurance or workers' protection, workers' salary protection, something like that.
So if you were working for somebody and then they went bankrupt, and then did they have to go bankrupt, or can they just be out of business?
Insolvent, insolvent.
Oh, okay.
Well, I guess, let's say I work for them and then they go bankrupt. So by the time even they file their bankruptcy, it may take a while.
Sure.
But I'm out of job. And according to law, I was entitled to my severance, to my, vacation, to this, to that. So government of Canada, in order to protect you, they have put this program in place that would take care of such workers. And it would pay them at least, so then, for, let's say, 2 weeks or a month, you're protected, you got your wage insurance. And then, by then you can go find a job, and the other company, probably going to take a while for the bankruptcy to be finalized.
To go through, yeah. That's super interesting. I didn't know that.
It's,
Yeah. So I want to go back to that. If you don't have a T4 and you have to use your pay stub, do you have to paper file? Because you have to actually send that pay stub to the CRA.
I would say, definitely paper file, because if you e-file it, they're going to check either against T4, that let's say T4 was filed and it's wrong. Right. So they're going to check against that and say, well, we reassessed you and you owe us money. But if you send the paper to it, like your last pay stub, even add a little note. This is the situation. In that sense, what happened is that I don't think the agent at CRA just barcodes your tax in. They would give it to a special person to put it in. So they open a case. The user or the taxpayer has flagged this. Can somebody look into it? And then again, CRA has access to, T4s, payroll, and whatnot.
Right.
Not payroll, well, payroll too, I guess, in a sense. So they can adjust it accordingly.
That's good.
Yeah.
Yeah. What happens if you get a T-slip from the CRA and it's wrong? What can you do about that?
Well, I guess in what sense? Because CRA wouldn't necessarily issue any T4s. But again, you have your bank account, right? Like, where is it? I don't have it here. You could even argue against them. You could write a letter and, just explain that this is not correct, or this is not even fair.
Yeah.
They have actually one thing about CRA, because a lot of people are, I guess, misunderstand. CRA role is to administer taxes. They're not to, they're not there to provide, justice or, take anything into their own hands. They are to administer what Ministry of Finance put in place, which comes from the Parliament.
Right.
So it's not them to make a decision. They look at the books and say, okay, the book says do it like this way.
Right.
They actually have these manuals called TOMS, tax manual, and they're big. They're just binders from here to there. It's so huge, and these are instructions, very detailed instructions of what to do.
And I guess I was thinking about benefits. Like if you get a benefit from the CRA, and then, but you didn't actually get that benefit, like maybe your account was hacked, or maybe I don't know.
Again, you could raise that, write a letter, send it to them. They have many different internal branches that will look into the tax returns. There's some tax returns that actually has to be filed by paper. So they have individuals that working just on those. They open cases, they investigate. They have experts in-house that actually understands these. They can even see, they can look at your account to see if payment was made to you. So if not, everybody makes mistakes. So they can fix it.
For sure.
Yeah.
So basically, if you have an issue with a T-slip, contact the CRA.
Exactly.
They'll be able to figure it out.
Yeah.
That's
it's
good
massive.
advice.
I mean, it's a massive. Again, as you mentioned, I worked for CRA for 3 years. It's a big, massive organization. Tons of programs. I think actually Canada was one of the first countries to even implement the SAP. So they would, monitor the tax preparation, the numbers, the reports, all of that. So it's pretty advanced.
By SAP, do you mean the software?
Yeah. So I know that even when England wanted to implement the SAP to better report their tax income and whatnot, they hired experts from Canada
Interesting.
from CRA to go that. So it's like, yay.
That's
nice.
interesting to know that the CRA has like an enterprise resource like management system that you would see in like industry or something like that. Yeah. So we talked about like wrong T-slips and like some of the common issues that you see, and a lot of those things will sort of lead to a reassessment.
Yeah.
What are the most common reasons that you see for a reassessment?
Again, the data being inputted wrong, because we do our tax return. Sometimes I guess, expose numbers. So instead of 96, let's say you put 69. What CRA has as one of their programs, it's called matching. I hope these are not confidential information. No, I don't think so. It's called matching. So what they do, let's say you file your taxes. And in Canada, taxes are done voluntarily. So let's say you did it by mistake or not. What CRA does, they run this program and it matches your T4, T5, T3, whatnot, and matches against T4 Rsps, and then they match these numbers. So if they're not matched, then automatically the computer would say, well, this is either overstated or understated.
I see.
And then you receive your notice of assessment, and you have two columns. These are your numbers. These are what we got. So either you owe us money or we owe you.
Yeah. And at the bottom, they'll always say like, we've reassessed your return, and like, here's why. Here are the changes that we made. Yeah. That's correct. Because sometimes my clients say, hey, you filed my taxes. I was supposed to get $800, but I owe $1,000, for example. Well, you made a mistake. What
I'm
happened?
like, okay, yeah, exactly. You betrayed me. It's like, okay, let me see the notice of assessment. I read it. It's like, okay, and then they explain, what the difference is. For example, let's say you had a home buyer plan, and you did not mention that.
Yeah.
So I was like, okay, that was a good information that I should have had too. Again, we can readjust it. That's the thing. Like they say, if a doctor makes a mistake, patient may die. If an engineer make a mistake, buildings may collapse. If an accountant make a mistake, nothing happens. We can adjust, reverse, amend. So it's not the end of the world. A lot of people get anxieties. They think, it's wrong. It's like, well, we can fix it.
The CRA is gonna beat down my door. I'm going to jail for this.
I'm gonna die. It's like, no, chillax. We can fix it. We can send a T1 adjustment, for example. It happens, and they fix it.
The first guy that I worked for in my first like real job as an accountant, he was the controller for half of an oil and gas company. And so he had a really big job, and I was just a kid, and he was like, there is no such thing as an accounting emergency. Like, everything can wait. And I was like, wow, that's a good attitude.
Yeah, that's true. But clients, a lot of my clients that whenever, let's say, CRA calls, they're panicking.
Their world is ending.
And it's normal. We get anxious or we get stressed, especially if you get a call from CRA. But again, they're nice people. I work with a lot of them. They understand the numbers. They know what's going on.
Yeah, I think that's a big misconception. Is that the CRA like somehow holds a grudge that like you've made a mistake, and so now they hate you forever. But they don't. They're sort of a big unfeeling organization. Like exactly what you said. They just administer the tax law, and that's it. Like they don't really care.
I use them as a great resource. If I'm ever stuck, it's something new or I don't know what's going on, I'll just call them. Like, hey, just recently, I had a client. It's like, I'm not paying taxes here. I'm like, what do you mean? He's like, well, we don't pay tax here. I'm like, okay, So I won't argue with them. I'm like, okay, I have to find out. So turn out some countries have treaties with Canada. One example is Sweden. So let's say you have a Swedish company, you come to Canada, you open a corporation here, you would give them your registration, so then they will register it in Canada, and then you use that treaty, so you won't pay tax here. So you pay the tax in Sweden, but not in here. So I'm like, oh, good to know. So I called CRA. I was like, hey, my client, this is the case. I'm like, okay. Even there's a case. When I worked at CRA, I was just reading up on these Tom manuals because we were internal control. So we had to basically find out if the tax returns are being done correctly, even by CRA. As I'm reading through them, there was this little subsection for people that are gluten intolerant.
Okay.
So if you're gluten intolerant and you have a prescription and your doctor says, these are the food that you need to eat, maybe those food are more expensive than your regular food, for example, or whatever you eat. So you could keep the receipts and then compare the gluten diet, and then you can put it in the tax return as a medical expense.
As long as you have a prescription.
Yeah, because I heard from a client, it's like, Mo, and the other thing is the question that come to you, sometimes they're not very clear. It's like a friend of mine said that, we could write off our grocery bills. That would be nice. I don't think so, but I'll check, So then you're like, oh, okay, this is what they mean. Grocery for people that have to have a special diet.
Yeah.
So that becomes, and it makes sense, that becomes a medical class, and the medical expenses in Canada are tax deductible. So, okay.
You have to keep really good records of what the difference in the price was, because it's not just your receipt, right, in that case?
Well, let's say loaf of bread, it's like $2, and then you're paying 10. Let's say, just hypothetically. So, okay, I'm overpaying $8, So, yeah, and I have to, And so that's why I'm saying, with all the respect to you file or this file or that file, don't file. It's not a plug. You basically the side effect is you would have more refund when you see a professional.
Yeah, that's true.
Yeah, so I don't do root canal on my teeth, even if it was $20.
Like a vending machine that just
exactly.
a root canal for you.
Root.
Just put your head in here, it'll be fine.
Exactly.
Yeah. So talking about deductions, what are some of your tips for saving money on your taxes?
Saving money, actual saving money was good. So you put away part of your money, but again, collect your receipts. Not for grocery, of course. That we just talked about. If you're vegan, sure. But keep your receipts. If you work at home, if you're self-employed, definitely keep all your receipts. If there's an arrangement that you have to work at home, keep your receipts. Again, maybe read up on, these days, everything is in Google, what deductions can I use? You could just Google that, it pops up. The other thing is, if you're spending anything for work, or if you're spending any money to earn money, logically, there would be an angle to classify it as an expense, because you're not spending on entertainment, you're not spending it on, leisure. So there could be, sometimes not, but so it's better to keep it and then ask, hey, I have this, is this deductible?
Yeah.
And then, the answer is yes or no.
Yeah. I think keeping your receipts is the big one.
Keep the receipts,
Because if CRA comes back and asks for them, you have to produce them.
Exactly.
Or it's disallowed.
Yeah. So I would definitely, again, recommend Dropbox. Little plug-in for Dropbox. If you download the app and you create a folder, let's say taxes 2021, because right now we're in 2021. There's no use for 2020 because it's over now. And as you spend in Dropbox, you could it's got a scan function. You can just take a picture and just leave it. So when you go see an accountant, give it to them. Or if you're doing your taxes, you can just have a look. Okay, this one is medical expense, good. This one is donations, good.
Yeah.
This is my RSP, excellent. This is, especially now these days, I had to go buy a laptop so that I can work at home. Or I had to, get a desk, to work at home. I would even say, I do a lot of Zoom call and my wall looks bad. I'm gonna put a little art, Maybe it's too much, but let's make CRA work for the money.
We have a video on the Captain's Club also that's just a non-exhaustive list, but just the common sort of deductions. So if you're looking for deductions, then definitely check out that video.
Yeah.
We still on that deductions
Okay.
topic, we talked about, if you work from home, that sort of thing. But what about if you're a sole proprietor? What are the sort of common ones that people...
Sole proprietor actually could be tons of stuff, but my number one recommendation is create a business account. So separate it from your personal account.
Yeah.
And then spend anything that you're doing for the business from that account. So if it's deductible, you can find out at the end of the year. Again, if you see an accountant, they can point it out. If you do it yourself, at least the numbers are there. So if your business bank account says, minus 2,000, definitely you lost money. Not good. You want to reconsider that business venture. If it says, 50,000, then the business was in a surplus, so you made money, which is good. Again, we don't want to, have deductions for the sake of deductions. I would say reduce your deductions as much as you can because that's how you get profitable. But at least through that, once you look at your bank statements, the list comes up. So if you have so with that business account, we don't want to see a lot of Starbucks or, Tim Hortons or LCBO unless, you're meeting the client or some of it is a gift. So that would give you a good discipline of, where to go. There's a good book, Profit First. Get that and they give you good tips on that. So basically the premise on that book is, earmark some of your money aside, and that would be just for profit. Keep the rest or spend the rest.
Yeah, that is such a super interesting concept in the sense that it's very much like cash accounting.
Yeah.
I think he starts that book by saying accountants are out to get you.
Yeah.
But it's really just the difference between accounting and looking at cash, and there is a difference between those things, which is difficult to sort of get your brain around.
But when I saw that book, I didn't want to get it. I'm like, are you an accountant writing this? No, okay, any business on this topic should be written by accountants logically. But then I got the audio version. Mike Malkovich, I guess, he actually narrates the book. He's very interesting. He's funny. The book may be a little bit too long, but it's got tons of information. So to me, it's not an accounting book. It's a business coaching book.
Yeah,
and it teaches you the practical ways
cash management.
Yeah. So have 5 bank accounts, profit, operating expense, taxes, compensation, and then the main one. And then, so if you follow his procedure, it's fantastic.
Yeah, I actually started doing that as an experiment.
Nice.
I mean, I only have the 2 bank accounts. It's just an accounting exercise, in my books kind of thing. But it definitely has changed the way that I look at my cash.
Yeah.
Even as a trained professional, looking at the profit and loss, it's different than cash, but I can sort of see it.
Yeah.
But looking at it through that profit first has been really interesting.
He talks about Parkinson law, that if you have a little bit of something, you utilize its use. I guess maybe, even increase that. And the example is toothpaste.
Yeah.
If you have just a tad left, normally if you buy another one, you just chuck it.
Yeah.
But that little puny could last you a month.
Yeah.
Because you won't waste. So that his premise is based on that Parkinson law. He says, number 1, profit first, put that aside. Doesn't have to be, 50%, even at 5%. Put that away. Put your compensation aside. Put tax aside, main topic of what we talk about. Because it's always great when you file your taxes, and then even if you owe $8,000, you happily pay. Because you had a profit. Because some people, when they do the taxes, geez, I owe money. I made $100,000. Dude,
Yeah.
you spend it all.
You spend it,
you with no reservation, you just spend it. So of course,
Yeah.
it's gonna pinch you, because even though you made 100 grand, you don't have, let's say, 10K to pay it. It's gonna hurt.
Yeah, and
But
that sort of double-edged sword of like, you want to be more profitable in your business, and you're working to lower your expenses and increase your sales, but the more you have in profit, obviously the more tax you're going to pay. And so it's always sort of that like, well, I want to make way more, but I don't want to pay any taxes. Like,
exactly. It doesn't work like that. I had a client, actually, I'm pretty frank with my clients. We've mostly been friends. I had one, he made like, I don't know, 150 grand. And so he's like, I did his taxes, and he's like, so how did I do last year? I said, well, that's not a relevant question now, because last year's last year.
Yeah.
On a big picture of things, you did great. You made, let's say, 150 grand.
Mm-hmm.
How you spent it and all that, I don't know. I'm just doing your tax return. So my income-wise, excellent. So yeah, I guess as the individual, if they feel responsible for their numbers, their expenses, their income and whatnot, if there's a discipline on that, that's great. So we know, I guess, how we did. And again, for us, as accountant, because we're accountant doesn't mean we're good with cash.
Yeah, I've heard a lot of stories about that. Yeah. I think also that goes back to that profit first idea of like, we're telling them, well, you made $150,000, you have to pay tax on that. And he's like, I have $10 in my bank account. Like, I didn't make that much money. But that difference between cash and accounting,
huge difference.
There is a big difference. But it sort of gets jumbled up in the brain. Yeah.
For sure.
So this is sort of switching gears a little bit, but I have a lot of clients who will ask me, like, how much should I contribute to my RSPs?
Mm-hmm. That's a good question too. I learned that from one of the masters. He said, do not pay your RSP till you pay off your house. And he's right. Let's say you have a mortgage and you're paying them, I don't know, 5% interest. So if you didn't pay that, that means you earned 5%. And that's tax-free because you've saved it. So there's interest-free on savings, So that's number one. Number two, in order for you to get any refund or any money back when you contribute to RSP, there's more money leaving your pocket. So I have to pay $5 grand to get, let's say, $750 back. So if the concept was cash, we talked about, there's a difference between income and cash. So if the concept was earning or saving cash, well, I just let go of $5 grand, and I got $750 back or $1,500 back. But if you pay down your mortgage, well, you're gonna save on the interest that you were paying on the house. This interest is, in a way, indirectly is an income because you're paying less interest in the future. So I would say definitely pay off your house first, and then look into RSP. Even at that, I would, so, nothing against RSP, but, you're paying 5% on your mortgage or 3% on mortgage, and you're making 1% on your income. So, but you're actually losing on that money unless it's self-directed, which could be also risky or dangerous. Self-directed is the one you manage what the RSP does. You can buy stocks, but if you don't know what to buy, you could even lose that too, unless you follow Warren Buffett.
That's exactly what he did.
Exactly.
Yeah.
So my personal feeling on RSP is, unless you're going to buy a house, let's say you're young, you say, I want to buy a house in 2-3 years, that makes sense, and then you can, contribute to RSP and then take that out, buy the house, and then pay it to the bank, gradually. In that way, it makes sense. Now, let's say your house is paid for, you have no debt, because on the debt you have to pay interest also.
Sure.
And I guess everybody knows, if you look at your Visa card, it could be from 14 to 30% interest. So why would you make 1% and then pay 30% interest? So pay off your debt, be debt-free, mortgage or the other one. If all that is done, then contribute to your RSPs. But again, remember, you have to pay more to get
it
a little
back.
refund.
Yeah, and if you're in a position where you want to be doing RSPs, it's worth it to know, to have a really good idea of what your retirement is going to look like, because you have to pull that out later.
Yeah.
It doesn't just sit there forever.
Exactly.
So if you're in a lower tax bracket, say you are debt free, but you only make $25,000 in a year, it's not going to help you to contribute to your RSPs. You need to be doing that in your highest earning years.
Yeah. And you can buy, if everything is paid off, maybe you can buy another real estate. That's a good RSP.
There are other ways to invest.
Yeah.
How do you know? We've sort of talked about this all the way through, but how do I know when I need to talk to a professional?
Well, if it's worth it, if you're making, I guess above poverty line, talk to a professional, because again, the offshoot is that you get more money back. I could, in a way, guarantee that, you end up saving money. So that's the benefit of a professional.
They pay for themselves.
When you go to a doctor, they save your life. When you go to an engineer, makes a house that stands. You could do it yourself. You can do EU root canal. Maybe I should patent that name and make a software. Grab the drill. So talk to an accountant, because we make a great friend. They know numbers. They can give you pointers. Maybe not your past, but at least the future. They can give you a lot of points on the business, even if it's not a business, what kind of receipts to keep. They can actually ask your professional, tax preparer to represent you when client comes in, or CRA knocks. That, I think, if that stress is gone, it's definitely worth it. To me, huge. To me, it's not a big decision. Do I need one or don't need one? You need one.
If you're humming and hawing about it, you probably
need one. Exactly. Especially these days. I have clients. Even though government says yes, you can use the $400 maximum COVID thing. It's like, yes, that's one option. Actually, if you look at the form, it says option 1, option 2, like things 1, things 2. Option 1, option 2. So option 1 or 2 doesn't matter. I don't want that. I want to actually put the stuff that I use at home, either for business or for work. And I've made an office, at home, COVID, everybody's working at home, I've got a 200 square feet office now, and everything there is related to office, because you want to make it look professional. The poster, the desk, the printer, the flower, the whatever, the laptop. Even if you're going and buying a little mic, so then you can talk better. Sometimes I work at home. I use my laptop, even though it's a ThinkPad. The sound is really bad, so I'm like this, so the people see my ear. I was like, "Whoa, get that out of my face!" But so I have to get a little mic, so then the sound is better. Or even sometimes it's in my nose, so you have to go get a little camera, put it on the side so people can see you better, and the quality is better too, because you want to impress them, right? So all the stuff that you had to buy to impress, deductible. Wi-Fi at home, deductible. I didn't use Wi-Fi before. I never looked at Netflix, but now I have to use Wi-Fi. So deductible, Again, talk to a professional, you save more money.
It generally pays for itself. Tenfold. Even just the peace of mind of if you get a letter from the CRA, somebody else is going to handle that.
Exactly. And just that it's like I get a letter. Like this lady called me. It's like, Mo, you didn't do this. I got red flag by CRA. Sorry if it's you. So it dramatized it to the fullest. And all it was, CRA wanted the receipt for property tax, and which is normal. It's not even a red flag. The computer says, let's look at this receipt. Just a random lucky number, And I just submitted. I said, you're not red flagged. And I actually, again, with my clients, we have good relationship. calm down, lady. You're not red flagged. It's not an audit. It's just CRA wants something.
Yeah.
So because CRA wants something, it's not an audit. To be honest with you, if you're audited, you'll feel it.
You will know.
Yeah, exactly.
You will know.
Exactly. I had actually one of my friends at CRA, he was an auditor, and he said, sometimes we had to go to people's home,
Yeah.
just to have a look, the lifestyle, or even look at the information, because they're like, I don't have any, so they had to go in the house, look at this, look at that.
Mm-hmm.
So that you feel it. And again, he was a super nice guy. But yeah.
Yeah, I like love and hate that when clients are like freaking out because they've got something from the CRA. Or I've had somebody ask me on a sales call, like, have any of your clients ever been audited? I was like, well, no, but that shouldn't be the marker because a lot of times it's like your name got pulled out of a hat. It wasn't that you necessarily did something.
All my clients get audited.
Yeah.
Even the one that don't sign up.
You will be audited for having just called me.
If you reject my proposal. Yeah.
Yeah. Okay, my last question for you is, do you have any tips for getting ready for your accountant?
Get some bouquet of flowers, wine. Yeah.
A little box of cookies.
Not
maybe?
really, because you don't, again, you said box of cookies, Forrest Gump said, box of chocolate, you don't know what to expect. So sometimes leave it to them. It's as if, how do I get ready for my heart doctor? I don't know, I go there and he'll do his checkup, he'll do blood tests, he'll do this, he'll do that. So you don't even need to get ready to see your accountant because they were trained to meet you for 6 years. We had, as we had to do cases, we had to do, tons of scenarios, tons of tax returns. Cases again, because I loved cases. They give you one thing and then how do you deal with this? Again, it's open. And you could do anything, you could be creative. You could find solution. You could think outside the box. You don't need to do anything, necessary unless it's for tax. If it's for tax, make sure you saved every document.
Yeah.
Make sure you have, I don't know, go show up in a box. Because the thing is, he may say no, but if it was tax deductible, then you add it. When I used to work at CA firms, we had this table. This place was super busy. So as people bring documents in, we had a table that put all the tax returns. And then there were a bunch of staff. So we would go in, grab one and then sign our name. And I would notice the big package would just go, nobody would pick it. It goes. And it's number one, nobody's picking. And I loved messy ones. So I would go grab the big one, and everybody's like, yeah, he grabbed it. So I go, actually, sometimes it would be one of the easiest because they had everything, so I just flipped through, and you can go fast, And, but again, Loblaws, okay, put it away. So you go through them, you find the receipt, like it would take 5 minutes to just go through them. I would sort them, these are the T-slips, let's say. The rest of it, sometimes it's a letter from CRA, that, this year we did this, okay, good to know. And, it would actually be one of the easiest ones. And then I would go back and everybody's like, we love you. I was like, it's not that bad, but we're afraid. But again, and some people would just give you, let's say, 2 papers. That one, I would say you had to pay more attention to the people that just give you 2 pieces of paper because
it's more detective work.
There's more. You had to call them. Or you would look at a prior year tax return. Say, okay, so what did they claim or what did I claim last year? Do I have those? One thing that I see, actually, one of your questions was the expense that gets missed. Students. A lot of students miss their tuition fee because in the past, universities used to mail it to them. Now, with Ottawa U, Carleton U in Ottawa, the student have to log in to print it. So a lot of students wouldn't. I deal with a lot of parents that say, hey, can you do, my son's and my daughter's tax return? And I always, have to wait because I would say, could you ask her for, T2202A.
Yeah.
And then, would ask them, and it takes time. Or they would send you the blank one because they download it, but they don't wait enough for the, boxes to get filled. So they give me the form, but it's blank. Then, another email, thanks for sending a blank form. It would be nice if it had numbers on them. And then they would send you the one with numbers. But last year, mind you, universities, filed them with CRA. So if you're auto-filing or using CRA, so the form would be available on CRA website, which is good because university, let's say if you miss it for 3 years, that could be 40 grand that you've lost.
Yeah.
So again, if you did the U file, because you're a student and you want to save, or maybe it's free for students, good, but then you lost the 30 grand.
Yeah.
So don't fall for that carrot on the stick.
And then if you move provinces, then you can't use your provincial credits.
Exactly.
Yeah.
But at least you got federal. So
That's true.
Or yeah, that's great. All right. Should I?
Go ahead.
All right. Thanks. So I would say it could actually be all in one bank, but I'll explain the double bank system too. So you would go to your bank, ask them for the 5 bank accounts. The main one would collect all the income that you're receiving. So if you're in a business, that would be the main one. So when I send an invoice, all the money goes to that. So the first one that I would create, so if you have a software actually, you could even label them. So the first one the first one was the main one that you opened up. So the second one, we call it profit. So if you go to your software, you can, in QuickBooks Online, you can call it profit. So you would say, okay, I want to make 5% on this thing. So automatically, when I send an invoice, let's say for $1,000, I get $11.30. If there's HST, if there's no HST, $1,000. I want to put 5% to the profit, and I'm not going to touch it. So, and you see this at the end of the year when the guy owes taxes. At least the money's in there, or at least he can see the profit in that. So 5% right away goes to the profit account. This third account, or the second one after the first one that you open, it's called taxes. So we could say, well, okay, let's say you charge HST, so I'm going to charge, so 13% it belongs to governments regardless.
Yeah.
So I'm going to add another 20% because I'm guessing I would be profitable. You would be actually because you created that 5% profit. So you can park, let's say 25-13, that's 38%. So you put 38% after that 5, you put it into the tax one. The fourth one is compensation. You say, well, it's just like dividends, every 3 months I want to grab, I don't know, 5 grand. Or it could even be your payroll. I'm going to put, let's say 10% for compensation. So from that $1,000 that you got, 10% goes to the compensation, you don't touch it. So whatever is left over, let's say there's $300 left over or $400 left over, that would go to your operating account. So that number, that's where you pay expenses with. So, which makes you think or rethink about expenses. So let's say you freely go to, I don't know, buy items that you like. Now you would say, do I really need this? Would I pay, this much for that? Mm-hmm. Or I cannot afford this rent just yet. So I need to have, let's say, a partner. But if that 1,000 was into that operating expense, which that's how almost 90% or maybe more, 99% of people operate, they would say, oh, I have it. Mm-hmm. Yes, you have it, but you were supposed to pay other stuff with. So another example would be, I don't know, let's say if I do this online, then I can save. Mm-hmm. Not necessarily cheaper, but you bring the value. Do I really need this at this time? Mm-hmm. Do I have to be more profitable? And your brain, I guess the subconscious works on that too, in a sense that you would say, okay, well, I need to make more money. I really need this, I don't know, rent or this subscription, and my budget is only $300. And I know I put that money aside because it's earmarked for those things. So I'm short $100. This actually happened to my personal life. I was $800 short. But in my case, rather than reducing my expenses, I said, okay, you need more income. On my brain, it just works. Doesn't work on reduce the expense. It's let's make more money. So I'm $800 short. If I make 1,000, I can afford this. And it gives you good motivation. Okay, let's do that.
Yeah.
So in the book Profit First, he actually talks about going to another bank. Do not have online access. Don't get any check, and the compensation and the profit, you transfer it to that account. So in case you need to grab it, you have to go to the bank to take it, because the other thing that we easily spend, it's the plastic, just tap and it's paid.
Yeah.
So you make it hard. So yeah, I have to go to the bank, maybe on the way to the bank, say, well, how much did I save in the profit one? $2,000. Well, I'll make some more money and then let that be as a little nest egg or a little investment.
Because it's always easier to make more money than it is to reduce your expenses, or at least you're gonna get more out of it.
And again, if you have enough, again, the Parkinson law, if you have tons of toothpaste, I just cake it, some of it falls in there. I don't care because I have more. I can afford to waste. But if you have less, it's like, I better not waste. So this could be like, let's say if you're playing soccer and you're aiming for the net, if you're on target, you're going to score. But if you're not, it's going to go over the crossbar. And that's what happens in some businesses, Intention's there, the intelligence there, everything's there, it's just discipline's not there.
Yeah.
And that's when people lose it.
Yeah, that's what this Profit First thing is all about, is like instilling a system for discipline. I love that toothpaste analogy. I think it's so accurate. Yeah. My partner and I have a game where we whoever gets the last bit out wins. Nice. Yeah.
That one, another principle that works with that is 80-20 principle, the Pareto law. This guy in Italy, I guess he was working in stats, and he got stats on land, and he realized that 80% of land in Italy is owned by 20% of people. And then he did it in England, saw the same thing. He did it on wealth. He even did it he was growing peas. He did it on his pea pods. And he realized that 20% of the pods give 80% of his crop for peas. So if you bring that to your expenses, you could say, okay, which one of these expenses are making the most impact? Which one of them has the 80% effect? Which one of these 20%? So you want to do more of that. You want to keep more of that. And again, the reverse works too. 80% of money could be also, not providing the 20% benefit. Yeah. So you reduce this, add a bit of that, and that's just the magic ingredient for you to have more cash in your pocket.
Yeah, what are the big levers that you can pull those for sure? Do you want to talk a little bit about logistics on that? Because I know when I started doing this, even though it was an accounting exercise, I wasn't sure exactly how do I really know? Because for me, I was like, I'll just look at my sales, but that's not really what it is. It's the amount going into your bank account. So do you once a week, do you move this money around? Once a month?
As soon as it comes. Okay. Because if you don't do it right away, chances are it's going to be harder to do it later. There was a experiment done at Harvard University. They had a few monkeys, gave them a banana, they're all happy. They brought the set of monkeys, they gave them 2 bananas and took away one right away. And or later, they were extremely upset because of that. So if it's in your hand and they take it, you're going to be pissed. If you just get one, you're happy. So this is it. So your that income is just, I guess, the silo. where the money comes in, and then you just automatically put the money aside. So then you're left with the operating. So it's just like the monkey that had only one banana. It's just that's all you got.
So as soon as
yeah.
get that money in.
Yeah.
So if you're getting like a lot of small dollar sales in a day, maybe you're doing that once a day kind of thing.
Yeah, but if it's small, yeah. But I would say every invoice that you get paid,
just
park
do it.
Yeah.
Okay. Well, thank you so much
My pleasure.
for this. This is a lot of fun chatting with you about taxes.
Thanks.
Thanks for joining us.
Good luck.
Thank you. You too.